Hello dear students, welcome to Devika's Commerce and Management Academy. Indian Accounting Standards Introduction I gave you in the last class. Okay. So there are total 40 accounting standards. Out of that, first accounting standard we are going to discuss. What is first accounting standard? That is presentation of financial statements. Presentation of financial statements. That Indian Accounting Standard 1. You know that financial statements which represents the organization's financial position. Mostly you know that trading profit and loss account. After that we'll be preparing the balance sheet, cash flow statements and analysis of capital. These are all things we say it as a financial statements. Financial statements, if you understand and if you are following a proper way, proper method, proper statement, then automatically it will reflect and it will give you a sure results and also proper way of presentation. Uniquely you can follow it. Same uniform results you can follow it very clearly. What is Indian Accounting Standard? IAS. Indian Accounting Standard 1 is saying, simple one sentence you can understand, it is IAS 1, Indian Accounting Standard 1 includes financial statements. This is going to include only the financial statement. Financial statement related, its structure, financial statement structure, content and notes to financial statements. Structure, content and related to the financial statements notes. So this we can say it as a financial statements. And remember that it reveals the financial aspects of the firm. Reveals the financial aspects of it. It is also called as financial reports. Financial statements are called as financial reports also. We know that financial statements already we have studied, we have prepared it, but now accounting standard. Indian Accounting Standard 1 is saying in a different way the presentation of the financial statement. What is this? How we are going to prepare that? That we'll see in depth. First of all, we'll study the theory, then after that we'll see the formats of the financial statements, different formats. Okay. Now, first of all, let's understand the scope or application of Indian Accounting Standard 1. Scope and application. How do we apply? What is the scope of this Accounting Standard 1? So simple 4 points you try to understand. The first one is, this Accounting Standard 1 is profit oriented public undertakings. It's applicable. Accounting Standard 1 is applicable for the profit oriented public undertakings. Okay, profit oriented. And not only that, non-profit organizations also we are going to consider. Non-profit organizations with some changes. Here is public undertakings and here non-profit organizations. This is profit oriented. Second one is non-profit oriented but with some changes. Few changes we can do it. So with that changes it is allowed, Accounting Standard 1. And also to compare financial statements. Its main scope is to compare the financial statement. Financial statements means one company financial statements with another company financial statements. That comparison is possible. You must see that when you prepare the financial statements. And also not applicable, these financial statements are not applicable for interim financial reporting. Interim financial reporting means, this interim means below 1 year. Most of the time 6 months to 1 year, in between that when you prepare any reports, that we call it as a interim financial reporting. But Accounting Standard 1 means financial statement. This is not applicable for those who are preparing interim financial reporting. Means mid of the year, whenever we prepare financial statements, for them this is not applicable. Am I clear? If you are preparing financial statements for full year, like April 1st to 31st March, yes. April 1st, 31st March, applicable. Interim, mid of the year you are preparing, no. 4 points remember. Very easy to remember. Profit oriented, all government undertakings, okay, public undertakings. Non-profit organizations applicable but allowed few changes. And to compare financial statements and interim financial reporting, for them it is not applicable. accounting standards. 4 important points. Then after that we'll see objectives of accounting standard 1, main objectives. The first main objective is to give accurate format to all the organizations. Profit oriented and also very clear cut information is to be given to the organizations through this format is the main objective. Apart from that, other objectives are, one is to provide information about economic resources of an organization. How do we got the resources of economic resources? So this information is going to provide by the accounting standard 1, that is financial statements. Main objective to provide the economic resources. How do you got the economic resources? How do you got the capital? How do you accumulate the rest of the amount? That is economic resources of the. This is to be informed. And next, to furnish information. To furnish information about the company's obligations. Obligations means nothing but company to whom the company is owe, to whom the company has to pay. So that obligations also to be mentioned in the financial statements. Where do you mention? Liabilities side. The same thing. Next one, to disclose the particulars of net resources of the organization. Financial statements, another objective is to disclose. What to disclose? The particulars of net resources. Net resources, how do you got the money? How do you got the income? If you are writing profit and loss account, income side you are writing something. So how do you got that resources? And in the same way, balance sheet, asset side also you are writing something. And when you prepare the cash flow statement, cash inflow is nothing but the net resources. How do you got that information? That you have to disclose the particulars of net resources of the organization. Clear? Next objective is to provide information to forecasting the earning capacity of the organization. To provide the information related to the forecasting the earning capacity of the organization. What would be the earning capacity of the organization after 2 years, after 1 year, or end of this year, something like that. Always we forecast. Without forecasting, we can't go ahead. So this object is also given by the financial statements. Total 4 objectives. Let me give you very clearly, easy to understand. Try to say along with me. First one is to provide the economic resources of the economic resources we wanted to provide to the organization, and also to furnish the organization's obligations, resources, obligations. Then to disclose the particulars of net resources. Net resources, how do you got it? And to provide the forecasting of the earning capacity of the organization. These are the main objectives of the accounting standards. Easy to remember when you just recollect financial statements, especially balance sheet. All these points are there in the balance sheet. Na? The same thing we are presenting in a theoretical way. Their practicals we had done. Now the same thing we are writing in a theoretical way. That's all. Now objectives are over. Now next, coming to the features of financial statements. What are the main features? On what basis financial statements are preparing? Total 7 features are there. First one is going concern. Financial statements we are preparing with going concern concept. Concepts and conventions we have studied. There we learned going concern. Going concern means we assume that when we started the business, it is going to continue for long period. In the same way, when we are preparing financial statement also, we assume that it is not for 1 year or 2 years. It is going to continue for long period. With this concept, we are preparing the statements. Okay, that is financial statements. And in the same way, second one, true and fair presentation of information. Financial statements, whenever we are preparing, that is true and fair. Everything is absolutely transparent. No modifications, no changes, no frauds, and no mistakes. So everything is fair and true. So with this concept, we are going to prepare the financial statements. And next one, reporting period. What would be the reporting period? Reporting period will be always 1 year. That is April 1st to 31st of March. In any case, if there is any delay in preparing the reports, you have to give the explanation, but do not delay it. Give the explanation and submit this financial statements as early as possible. The delay reason also you have to explain, but presentation is important. What is that? Reporting period. Period is 1 year only. If any delay, we'll give the explanation but present it. And next one, actual basis of accounting. Accrual. Accrual basis of accounting. Accrual means receivable, payable, both the items. Suppose say rent we have to receive, not yet received, going to receive. Accrual, rent. Dividend yet to be paid, outstanding dividend. This is also accrual expenditure. Okay, like anything related to the financial statements, receivables, payables, both we are going to include it in the financial statement. This also you need to remember. Then after that, another feature is classification of materials / information. Material, whatever we are having, that material you have to classify it very clearly, like how much is the material you have purchased, how much is in working process, and how much is in finished goods. Like a clarification, a clear understanding, that you need to mention it while preparing the financial statements, right? So this is another feature. And next one, comparative information. Whenever we prepare financial statements, comparative information is to be provided. Last year financial statement is there, this year financial statement we are having, both are in a position to compare. Comparative information, like last year shareholders are this much, this year is this much. Then you can compare it whether it is increasing or decreasing. In the same way, current assets, total current assets, you just check it out. And this comparison is possible with last year to this year, and also one company to another company, one branch to another branch also. That comparison information is to be disclosed by the financial statements. Another last feature is consistency in presentation. When we prepare financial statements, as per the accounting standard format we are following, then the presentation will be always same way. Consistency will be there. There won't be much changes and it won't be flexible. You have to follow the format. Anyhow, the format we are going to discuss in the coming class. Anyhow, remember that consistency in presentation of the financial statements is also one of the important features. Total how many features we have? 7. Let's have a recap. First one is going concern, we know it very well, and also true and fair presentation of information, and reporting period 1 year, and accrual basis of accounting, receivable, payable, that we are going to include it. Assets and liabilities are we used to write now, the same one. And classification of material also we have to mention it very clearly, and comparative information is to be provided, and consistency in presentation. These are the main features of financial statements. Now next, let's focus on the structure and content of Indian Accounting Standard 1. What is the structure? Structure is mainly depending on the two aspects. The first one is statement of profit and loss account. Two aspects means these two comes on one category, these two comes under another category. So altogether we have 4 structures. First one is statement of profit and loss. We know that we used to prepare statement of profit and loss, means which is nothing but the profit and loss account. Profit and loss account format was different. Debit side we used to write all the expenses, losses, and credit side incomes and gains. But now this one, statement of profit and loss, this is not account, statement of profit and loss. So this format is different. The format is given on the desktop. You can just check it out. This format generally as per the accounting standard 1 is to be followed. This format you have to follow. Okay. Anyhow, most of the people, they are not following it because the understanding the format and implementation is a difficult task. Second one is statement of cash flow. Profit and loss is okay. Statement of cash flow. Cash flow statement, did you remember? Fund flow statement, cash flow statement, both we have prepared. Statement of cash flow, that format is also as per the accounting standard 1 we have to prepare. Okay. Next, third one, statement of balance sheet. Statement of balance sheet generally whenever we prepare, that's in vertical format, vertical T shape. All the liabilities on the left side and assets on the right side. That was the general balance sheet format. As per the accounting standard 1, it has given a vertical balance sheet. That link is also sharing on the top of the desktop. You can just check it out. Means vertical way. Vertical way we are presenting everything. Okay. So that statement of balance sheet. Then last one is statement of change in equity. These three we know: statement of profit and loss, statement of cash flow, and statement of balance sheet. What is the statement of changes in equity? Statement of changes in equity means this is talking about the equity shares. Talking about the equity shares, how many equity shares we got it, and a detailed information about the equity shares, like equity shares issued so much and authorized is something, and how much is the called up capital, how much is paid, like detailed information about this equity. That is statement of changes in equity. These are the 4 ways, 4 structures to be remembered while preparing the accounting standard 1, that is statement of what? Financial statements. Okay. Next, notes to financial statements. Notes also we need to provide. The required notes is to be provided. Required notes. In the notes we have to mention it very clearly related to the financial statements. Anything is to be included. Anything is to be disclosed. That we have to write it in the notes. While preparing these notes, you have to mention it very clearly. When we prepare financial statement, that would be always in the form of cash. We prepare the format now. In the format, we'll write the rupees, amount in rupees. Sometimes if the amount is in bulk, we'll be mentioning triple zeros, in thousands, in lakhs, something like that. Anyhow, that has to be mentioned. Apart from that, notes, 2 points you have to mention it as notes. First thing is that objectives of preparing notes. Main thing you have to remember, why are you preparing these notes? The objective of these notes. The first thing is that a detailed information is to be mentioned. No confusion at all. Wherever something is to be explained, so that we can explain it. That is detailed information. And also disclosure information. Detailed information we are giving. Disclosure information means wherever explanation is needed, wherever we need to present related to that particular point, some information, extra information is to be mentioned, is to be highlighted, that we say it as a disclosure information, that is to be mentioned. And also illustrated accounting policies. Illustrate the accounting policies. Any other accounting policies information is there, that is also to be mentioned. These are the main 3 objectives of preparing the notes. Then second one is that structure of preparing notes. Objectives we know. Objectives of preparing notes, 3 points. Detailed information, disclosure information, and illustrated accounting policies. Okay. Now structure. What would be the structure while preparing the notes? The structure, when we focus, objectives over. Now structure. Structure of preparing notes. For preparing a structure, please remember this point. The structure should be as per the Indian accounting standard. As per the Indian accounting standard. And we need to follow the accounting policies also. And description of information. Disclosure of information. Descriptive means in detail. Disclosure, relevant information is to be added. Okay. This structure we have to follow. 2 things we say it as the notes while preparing the financial statements. Now next we'll discuss about another important thing, that is disclosure of accounting policies. Disclosure of accounting policies means information is to be disclosed, information to be attached, information to be revealed while preparing the financial statement. This is mandatory information. Compulsory you have to mention this information. What kind of information is to be mentioned, that information we say it as a disclosure of accounting policies. This you can discuss into 2 points. One is capital disclosure. You have to mention about the capital in detail. How much is the preference capital, how much is the equity capital, how many shares are issued, how many shares are authorized, and how much is contributed, first call, second call, like that, related to the capital only. That disclosure you have to mention it very clearly. Now few points to be remembered while disclosing the capital. Okay, the organization, what is the purpose of the organization? The organization's purpose, policies, procedure of maintaining and managing capital. How do you manage the capital? This must disclosed as a separate note. What are the points to be remembered while preparing this capital disclosure? The organization purpose, policies, procedure to maintaining and managing the capital. So this must be mentioned in a separate note, capital disclosure. Then other disclosure, capital disclosure is over. Other disclosure, other means apart from the capital. 4 points are to, not 4, 5 points are to be remembered. Okay, first one is the place of office. Disclosure information, mandatory information you have to give. So what is that? The place of the office, where the office is located, legal status, like where it is incorporated, mainly the office location point of view. First disclosure, other disclosure, first point. Second point is the type of business, what kind of business they are doing. Are they doing software business? Are they doing electronic equipments? Are they doing any sanitary related business? Like what is that? Nature of the business, second point is to be mentioned. And third one, the characteristics of business, that is what actually the business is. What actually the business is, the characteristics, mainly the ambition, how they have started, what is the ambition of the organization, how they want to run, everything comes under the third point only. Next one, the amount of proposed or declared dividend. Now here in the fourth point we are talking about the proposed or declared dividend, which is not included, about the dividend, proposed and declared dividend. We have a proposal of dividend and also we declare dividend, which is not included. So related to that information is to be informed in the financial statements, because it's a part and parcel of financial statements. So in the fourth point, proposed and declared dividend. And last one, the amount of cumulative preference shares. Now here we spoke about maximum equity capital. Now in the last point, the amount of cumulative preference shares which is not recognized or included in financial statements. If cumulative preference shares which already included, doesn't matter, need not to talk about that. Where cumulative preference shares are there which is not included, that you have to mention it in the disclosure information. Am I clear? 2 points. Disclosure of accounting policies. One is only specially for capital. Second one is other disclosure. Other disclosures, what we have? Office and legal existence of the office and nature of the business and characteristics of the business. And here fourth point, proposed and declared dividend which is not included. And last one, cumulative preference shares which is not included. That is not recognized and not included in the financial statements, which is to be mentioned. So this is about the disclosure of financial statements. Now remember one thing, if you know the financial statements, this everything is what we have discussed is just theory only, just theory. Practically already we have done problems. When we talk about structure and contents of Indian accounting standard, statement of profit and loss account, profit and loss we did not prepare, but statement of cash flow and statement of balance sheet, both we have prepared. Statement of cash flow statement we have prepared. A small changes related to the cash flow statement we are finding in the accounting standard 1, and this one statement of balance sheet, this already format we are following. If you check out company accounts, there we have been following the same format, vertical format. First liabilities are categorized into 3 categories, and then after that it comes to assets, vertical format. This already we have been following. Only a theoretical explanation we have given in this talk, accounting standard 1, that is statement of balance sheet, which you can say financial statements also, and also you can say it as a financial reports also. So take a screenshot. Hope it is clear. Need not to worry, very easy. Only if you do not know that subject, if you do not have any idea about this topic, then you will be scaring, what is this, what is this? No, simple, very easy. Point wise you remember it. Write a notes also. Okay. And other accounting standard of accounts, accounting standards we are going to discuss in the coming classes. Stay connected, check out the playlist, and whatever is useful, use it, and don't forget to share this video. Good luck. Take care.